Thank you. The headline GDP number was a touch below expectations. However, I think what people are also very closely focusing on is the activity momentum in September, particularly with regard to fixed investment and infrastructure investment, because investors are watching very closely for the potential impact coming from the government's turn of policy starting around July this year with a more supportive fiscal policy with focus on infrastructure investment. So that's where there has been a lot of attention on. And I think from that perspective, the numbers had still come in rather on the mixed side. So fixed investment was a touch better than expected, but the infrastructure part, the growth was still rather sluggish. So I think in that perspective, we will still need to watch a little bit more, for example, going into the October number, whether you will see more signs of stabilization and improvement on infrastructure investment. But overall, actually, if you look at the demand side for September alone, most of the demand side numbers, including exports, retail sales, and even headline fixed investments, were above expectations. Yep. And the softness in terms of the industrial production seems to be an important source was from the auto sector, where auto sales and auto production have been slowing more significantly in September.
Certainly, and that's been a worry point for many of the European and U.S. automakers as well. Grace, the big question I have here, though, is how much additional stimulus are we going to get, not just on the monetary side of things, but from fiscal policy as well, given what we know now about the growth slowdown?
Exactly. That's where a lot of the attention and policy discussion is focusing on right now. The way we see it is that going into the next couple of months for the rest of the year, you will continue to see some feed through of the policy we already saw. For instance, the fact that local government special bond issuance have been picking up and actually accelerating pretty notably in August and particularly going into September. So that should begin to show up in terms of more impact on infrastructure investment picking up. I think what is more interesting is what is the policy tone going into 2019, especially with the expectation of further escalation of trade tension. For instance, our baseline now is looking for, with regard to the 200 billion import tariff, the first tranche of 10% rates was imposed in late September. We are looking for that to be lifted to 25%, as the US government had planned for in January. And then beyond that, we are actually expecting that it's quite possible you would have the tariff to be imposed across all Chinese exports into the US. That's now our baseline. So with that backdrop, you will have more drag coming in from the export sector going ahead. Remember, until September, so far this year, the export sector growth had actually been doing quite well, partly reflecting front-loading of exports. So in that sense, we would see more downside coming from the export sector going ahead, especially into the first quarter of next year.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.